the Central Bank of Nigeria offered 60 billion naira at the OMO auction on Thursday, and Bankole Odusanya is the head of fixed income at UBA. He joins me to review the trading week. Thank you so much for your time today, Bankole. Let's step back and look at how the week has been so far with that OMO auction, and also I'd like to get your take on what we're seeing play out with interest rates views, given the levels of inflation that we're seeing in Nigeria currently, and even if you listen to the conversation I just had with Paul there, the possibility of a petrol price hike.
Thank you, Ken. Most of the activities we are seeing in the fixed income space revolves around the auctions, both OMO and Nigerian Treasury auctions, which we had this week. Yields went up slightly on the 1 year Nigerian Treasury bills issued from 5.5 to 6.5, but rates were maintained on the short end, the 90 days and the 180 days at 2 and 3.5, because the major players and major funds are going after short-term assets, such that they would hold their funds in the short-term assets and expect that yields climb in the next 90 days, for instance. So there's more attraction and reaction towards short-term assets, like 90 days and 180 days. And then even at the OMO, we are seeing a lot of interest for short-term assets also. It's just that the central bank is selling just about 10 billion of the 90 day and 180 days. Rates remain the same at the OMO auction, but at the 1 year end volume that was sold was reduced. So there's a counterbalancing effect, simply because yield expectations remain high, but instruments on offer and sold are still not so much, especially when compared to maturities that come in on a weekly basis.
But let's look at how this is going to impact the bonds markets going forward. And I'd like to get your take on the March bonds, the FGN bond auction that is coming up, and then the MPC meeting that we're expecting in a couple of weeks.
Okay, it's this time around, it's quite it's a space to watch, simply because there's also a monetary policy committee meeting a day before that auction. This auction, a lot of PSAs and other stakeholders who have funds are interested in buying bonds at high yield, especially at double digits, like we saw where rates stopped at the last auction. But because of what I had explained earlier about threats of securities, like we're not having enough securities for the market, there's a likelihood that the bids may be very, very, very high this time around, such that rates may be at or slightly below where rates stopped at the last auction. So therefore, it's kind of tricky. And then if you're looking at the other factor, which is yield expectation, it's also a possibility that the central bank may want to change its stance about tightening, especially using monetary policy rates, which is currently at 11.5. There's a possibility that they could step up on rates this time around on the 24th of March.
All right, Bankole, but first, when you look at what's playing out with FX, though, looking at the recent communique about the naira for dollar scheme that NMPC, the CBN is putting out there, I'd like to get your take on this and the likely impact you see this could play out in the market.
Okay, we have not seen any immediate impact on the markets. In fact, more of the data showing that remittances have reduced is having more impact as bids continue to outweigh FX supply. We know that in the parallel market, there's been about 5 naira, 10 naira shift away from where rates were to about 285 and 280. We expect that if this 5 naira incentive is going to work, in the next 30 to 60 days, we should be able to get some data to show that there's been some improvement in remittances. But for now, we have not seen immediate, we have not seen impact of this new policy.